Today we got a big one. Fundstrat's Tom Lee says inflation is on a glide path towards sub 2% by the middle of next year. That's pretty bullish, Tom. Just a quick recap. It's another red day in the market. The QQQ is down about 0.9%. The SPY is down about 0.6%. All big tech is red, and we're finishing at the lows of the days. That is a bad sign. FOMC minutes came in, added to the sell-off. If you guys enjoy these types of videos, hit the like button, and let's jump on into it.
Join us now to take a closer look at the markets today. Today is Wednesday. Sometimes maybe on a Monday just to figure out what's going to happen for the week after you made that call, that weekly call, which you're not going to do anymore. Tom Lee, co-founder of Fundstrat Global Advisors and a CNBC contributor. Tom, you're correctly bullish, and then more recently for August, you thought that maybe we'd take a breather. I don't know if it's more than that. Maybe 10% pullback, maybe not, but that's kind of playing out as well.
That's right. It's August is generally a tricky month historically, especially when the markets are strong through July. It does seem like the weakness is a lot more pronounced, especially because yields are up and the dollar's strong, and I think people are maybe fretting a bit about China too. So I think later this month, starting with the FOMC minutes, and then we get Jackson Hole, and then at the end of the month we get the inflation data, the PCE. Maybe that's when markets start to feel better. So maybe we could finish August a little better than we started. But you're right, maybe it could be deeper.
Your call was based on the trend in inflation, which continued in the week that you made the call. It was based on the inflation numbers that were coming that week, which were friendly. They were soft. And but the economy, meantime, has been much stronger than most people thought, and now it's going to be no landing or soft landing, or people are thinking the narrative changed. But you still feel that inflation is going to show a downward trend. In the PCE, what'd you say, 0.2%?
Yeah, that's right. I think core inflation which came in at 0.16 last month. That's
Sorry to cut you off, Tom. Look at these charts. So this just puts it in perspective, guys. They're really amplifying how big this sell-off is, but in real terms, you can see it's almost non-existent. It almost looks flat. That's how far we've come, guys. So just in context, just keep that in mind.
still reflecting an elevated housing number. Shelters running at close to 8%. That's going to start to cool, and there's a lot more downside in used car prices. And then core services, which is the rest of that piece, it's actually been cooling because that was kind of been pushed up by vehicle insurance and auto repair, which are going to start to fade. So I think inflation is on a glide path towards sub-3, sub-2 by the middle of next year. That's why I think
Sub-2? Sub-2?
I think we could print something pretty low because when shelter goes to zero, then you could have core at zero. I mean, you could have some zero month over month, or even negative month over month for a bit.
It's weird.
That's like a shocker.
Well, we back out energy.
Yes, that's right.
That helps because energy is, but then it filters through to other things where it does seem to can be reflected even though you back it out. Right?
That's right, because the diesel filters through as a surcharge. I think the Fed will be alarmed a little bit by energy, but they will treat that differently than something sticky, because energy can sometimes be idiosyncratic. The rises and falls.
So under 2%. So the highs by the end of the year still in your playbook?
Yes.
All-time highs in the S&P by the end of the year.
Yes, I think as bad as August is, maybe even if we're down 5-8% in August, there's $5.5 trillion of cash on the sidelines. I do think a lot of people still think the Fed is going to hike, but if they do only one more, I think the market can absorb that. And then, of course, growth has been strengthening. And look at S&P earnings, ex energy, it was up almost 3% in the quarter, the first time in 6 quarters. So I think you have an earnings recovery, Fed maybe slowing, interest rates could stabilize, and then the cash gets put to work.
Can we do all this with China falling out of bed?
I mean, we do have to watch that carefully because on the one hand, China's weakness exports deflation, which is kind of gives us 2024 the idea that producer price indices and CPI could be softer. Right. But you don't want the second largest economy to fall into a recession or a depression or a recession.
How does this inflation call of yours, an economic growth call, is it either influence or impact your call on crypto?
It has.
I feel that they're all very interrelated for you personally.
Yes, because crypto is dependent on monetary policy.
Right.
Right. So if inflation is cooling, then we can start to bet on forward financial conditions easing and central bank easing sooner. That's bullish for crypto or
right.
alternative assets. Yeah.
Okay. So, but what I'm trying to understand is which view did you back into? Do you understand where I'm going with this?
I mean, I think crypto is the residual. Is the residual allocation based on what the central bank could do? And of course, Bitcoin separately has as catalyst if an ETF, which we're in the window where we'll start to see the potential for an SEC approval of a spot Bitcoin ETF.
And are you strictly Bitcoin at this point these days?
I think it's still easiest to navigate through Bitcoin and Ethereum because of their regulatory status is a lot more clear, and even today's Coinbase announcement shows that those are the two ways to get liquid exposure to crypto.
And I always like hearing your price targets because you are so fearless. Where are you on Bitcoin by the end of next year, let's say?
Well, if the spot Bitcoin gets approved,
Yeah.
I think the demand will be greater than the daily supply of Bitcoin. And so the clearing price, this is done by Sean Farrell, who's our crypto digital strategist, is over 150,000. It could even be like 180,000.
But that's only if the spot, only if the ETF gets approved.
Yeah, and
so
the U.S.
This is a big if.
A spot U.S. because
Right.
a spot Bitcoin ETF is approved outside the U.S.
Okay, but if it's not approved, then are we just lingering around 29,000?
There's still upside counts because of the halvening next year. So you'll have a drop in supply again. So the clearing price has to increase. But
All right, so there's a little bit on Bitcoin, but mainly he's talking about inflation going to sub 2%, guys. This would be the best thing since 2% inflation. Can I get a woot woot? That sounds a little optimistic to me, honestly. I don't think we could get there, especially by the middle of next year. I think it would be positive if we had paused for a while, decided we didn't have to hike anymore, and then even got down to around 3.5%. That would be ultimately positive because we just don't have to hike anymore. That is the big thing. Once we show that we can sustain this and pause, then we can take the pause a step further and start bringing inflation down. That's when the money will start rolling in even faster. That's when we'll get back to the normal markets of up and to the right. Tom Lee, I love his opinion. He's so smart. He brings information from all parts of the market. He has so many market geniuses working with him, and they just make great calls all the time. What really sticks out to me is we have a lot of money on the sidelines. We're in a pretty good dip right now. We've got inflation at pretty much all-time highs in the last 10, 15 years. So a pause or starting to drop would just be massively bullish. You add that with everything else we've overcome, and guys, it's good to be bullish for the long term. Hope you guys enjoyed the video. I will catch you in the next one. Peace.